All right, so it's Sunday night, January 18th, 2016. And let's talk about China, okay? The first thing I guess we'll get into, and what I think is the least important thing, is this whole concept of Chinese GDP growth. Uh, Whether you believe the numbers, don't believe the numbers, whatever, let's keep it real simple. In 1994, I went to Shanghai, okay? There was nothing there, all right? It was a bunch of hutongs. I stayed at the Portman Shangri-La, which was the only hotel that foreigners were supposed to stay at the time. It was the only building in Shanghai that was over 20 stories tall. And that was Shanghai back then. That was when China was opening up and just starting. I went back in 2008 when I spent a month in China, traveled around, went to the Olympics, all that. And Shanghai was the biggest city in the world. It was like the 5 boroughs of Manhattan that they had built, plus that they built in 14 years. I mean, Manhattan should have the infrastructure that China's built, the highways, the ring roads, how many dozens and dozens of bridges and tunnels and trains and airports and all that. And it wasn't just Shanghai. Obviously, there were 120 cities that they built in China in 14 years, from nothing to these incredible cities. Uh, Never happened in the world before, will probably never happen again. So did they have huge GDP growth? You better believe they did. Did commodities go up? These guys are buying every single commodity in the world in order to do that. All the cement, all the steel, all the everything. And now that's over. They've built it. Okay, that's not happening again. So now they're going to turn into a service economy. Well, they better figure out how to get, U.S. style health insurance going, U.S. style lawyers going, you know, real quick if they want to get the service economy to replace what they just did during that time period. It's not going to happen. China's GDP growth is going to slow dramatically. It only makes sense. You can't do that again. So that's the GDP growth, and I don't really care that much about it. What I do care about more is the fact that people are saying things like, "Oh well, does China really matter to the S&P 500 because the S&P 500 earnings are less than 10% derived from China, and therefore we're not that affected," and all that. That's totally missing the point. We have a global system, and the economy is a global system, and what that global system counts on and has always counted on is inflation. Okay, because they borrow money and they pay it back later with cheaper money because of inflation, right? That's what the whole thing has been built on for a very, very long time. And inflation, we know, thanks to Milton Friedman, is money growth. More money, prices go higher, you have inflation. And China, because of what went on, is the only place that has any money growth. All right? I mean, the Fed and everybody did this QE and increased the money supply, but the number that's most important here that they cannot control, they can control the money supply, just print money, right? They can't control the velocity. The velocity has gone down massively, right? So you can double the money supply, if velocity halves, well, then you've gotten nowhere, and velocity is more than halving. China was the only place that had any growth and therefore any velocity of money. And look, it doesn't matter that the money's in China or wherever it is. It flows all over the world. It goes here, it goes here. Money can move all over the world. At least we had some money growth going on in China. Now we're not going to get that, okay, with a slowdown. The U.S. has tried to create money supply in Europe, and it's failed, right? So without that money supply growth, we're not going to get inflation. We're going to get the opposite. We're going to get deflation. We already have deflation. Even as the U.S. and Europe are printing this money, we've got nothing but deflation. I mean, we'll call it what you want. When oil in the last year has gone from 90 now for 12 months, 90 to less than 30, oil makes up such a huge part of any kind of cost for everybody. Everything uses oil, the machines, everything, the car. All you have is deflation. Deflation is bad, okay? Talk to the Japanese about what deflation did, right? Here's a Nikkei chart. Isn't it a long-term Nikkei chart, right? I mean, this was the Nikkei when Japan was taking over the world, all right? 39,000 the first month of 1990, okay? In late 2014, less than 9,000, 39,000 to 9,000 in 25 years. That's where deflation gets you, okay? And that's where we're heading, right? Velocity of money. This is the velocity of money chart for the U.S. I mean, it peaked in 2000. Look where it is now. This is the beginning of 2015. which is a year ago, by the way, right? And this is while they were printing money, right? So we're getting deflation, right? And this whole argument about the Fed, well, now they're only going to raise rate 2 times this year. The Fed is not going to raise rates this year, okay? The Fed is going to lower rates if they can this year, and that's not going to help because they haven't been able to raise them enough to lower them. And then they're going to go back into another QE, right? They're going to have to. They have to create inflation. Look, the Fed's mandate, all right, their mandate, read Secrets of the Temple, is to create employment without creating too much inflation. Right? They want a little bit of inflation, as we talked about. Have they been creating employment? Arguably, yes. Maybe yes. Have they been creating, any inflation? No. The Fed would love to keep rates at 0 forever, according to their mandate, if they could keep creating jobs without any inflation. The only reason they tried to raise rates, last month or whatever it was because they got to build a cushion, man. I mean, they pushed all in by lowering rates basically to 0 and printing money, and it's done nothing. It hasn't helped. So my question is, well, now we're getting deflation. What are they going to do now? They can't lower rates very much. 1 tick, maybe, right? 1 lower. They can do QE again. Well, what happens when that works? They're out of bullets, right? And this is why, and those of you who know me know I don't get bearish very often. This is why I think we're going into a multi-year bear market. So let's talk about that a little bit. How do you make money in bear market? Well, you're short. But the problem with bear markets is, again, let's go back to this Nikkei chart. You get rallies, bang, right? This is a big rally here, right? From under 15 to 20,000, right? You're looking at a 30% rally, another one. Here's a one that lasted, 3 years, right? It's very hard to make money in bear markets, right? The plays, if you're short, that's great, but it rips on you, and you're trying to manage your drawdown because you're trying to raise money, and that all comes down to, your Sharpe ratio and all that. So the people that are going to kill it are ones who can, in a bear market, are ones who can short and play the rallies, right? Very, very, very difficult to do, especially over time. You can get 1, you can get 2, you know what I mean? But it's very difficult to do. The men and the boys are going to be separated, and it really gets me into the hedge fund business, which I think is going to implode over the next 5 years. Implode, it's going down. Bill Ackman is going out of business. A lot of these hedge funds are going out of business. And whether it's separating the men for the boys or the lucky men from the unlucky boys, it is arguable. But the game's going to have to be, you're going to have to be a great trader, and you're going to have to be able to play these rallies. And that's going to be what to pay attention to. And again, as I said on Friday when my data that I like to look at, the positioning data came out, I think we're due for a rally here. Mostly because the market's getting too short, not stocks, but some of the metals, some of the currency plays, too long the yen. The fear has sort of come in a little bit too high here. I think we're due for a rally here. And it's going to be hard because how long does it last, and when do you get out of that rally, and when do you resell it? That all remains to be seen. But I think that's the play here. And I think that's the real China story is, if not them with creating money, who? Everything that we've done, everything you've done has failed, right? And again, it all comes down to this very chart, this velocity chart. You can't get velocity. It doesn't matter how much money you print. Deflation is the killer. So that's where I think we're at. Stay tuned to see what happens from here. All right, good luck.